Hi, Norman Howard here with your next 4-minute drill for traders. It's been 20 years since I ended a 5-year run as the host of the Risky Business radio show. It was a daily 60-minute show where I gave my opinion of various markets, mostly commodities, and I interviewed guests for their opinions. I was watching a clip from Jim Cramer's show yesterday, and he was commenting on one of my favorite analysts, one whom I interviewed at least a dozen times on Risky Business. Her name is Carolyn Borodin, and she had a newsletter called Synchronicity that was all about repeating patterns in the market. In this Cramer piece that I saw, he commented on her consistency in her S&P market calls as she looked for the same corrective action to repeat itself, followed by a rally. I said to myself, all she's really doing is honoring the trend. I mean, that's really all she's doing. I look at it this way. There's an undercurrent in every market that is a trend. You can have counter actions above the undertow, but when the undertow is hit, as the correction goes deeper, it supplies support to that general trend. On a move like we've seen in the S&P market over the last 5 or 6 years, we've seen a strong uptrend, a strong undertow. Every time it starts to correct, we think this could be the big one. And the longer the trend goes, the more we feel the market is overdue to correct. So this correction has to be the big one, and so on. Winds up, it usually isn't. I mean, Carolyn is smart about her market calls. She doesn't really predict. She lays out specific points of probability. If this happens or if that happens, and that's what we all should be doing. I'm recording this 4-minute drill on Friday, July 10th, 2015 at about noon Eastern. The market is having a big up day so far, bouncing off a support level. Is this the end of the current correction? And is it time to buy? Maybe, maybe not. It's up to your trading plan to tell you that. But smart trading plans honor trends, knowing that we humans are the ones that cause these trends. As we invest in a direction for the market, we defend that direction because we want to be right. The higher the commitment in that direction, the harder the trend is to break. Now, interest rates have been low for a long time, so the stock market is an inviting place to get a return. There are a lot of people defending that notion for years. That's why this current S&P trend is a tough one to break. Now, with rising interest rates seemingly on the horizon, is this the big correction happening now? Only time will tell. But for now, I'm going with the trend. And the fact that for 6 years, every correction has been met with new highs. But I have my stops in, and so should you. Got a comment? Let's hear about it. That's it for this edition of 4-Minute Drill for Traders. So until next week, take a second, make a comment, tell me what you think of this 4-minute drill. And as always, stay disciplined.